G'day and welcome to the Onchain podcast. Don here with you, and our guest today is Daniel Haudenschild, CEO of Synternet, formerly Syntropy. Daniel spent 20 years working in consultancy and fintech based in Switzerland. We're super excited to have him on the show to talk about the data layer, what it is, why it matters for AI, and how Synternet powers modular, interoperable data infrastructure across all major chains. And if you don't know why that's important, or why that's exciting, you will by the end of this show. So let's dive straight into our chat with Daniel. How did you get started in Web3? Tell us a little bit about your origin story, in particular when it comes to getting involved in blockchain in Switzerland. What did that look like?
Yeah, so my origin story, I think was 20 years in global banking, working in all different kinds of banks around the world as a partner at Ernst & Young. And having seen how much of our global financial infrastructure resides on and lives in, the space of Microsoft Excel, I was kind of immediately on towards the beauty and the pristine nature of what the blockchain can offer in that space. So it was, this clarity, this immutability, this contract finality, the decentral nature of settlement was absolutely mystifying to me. And then I started running around the houses of Ernst & Young, annoying everybody with this blockchain concept, which then I kind of, but I was hook, line, and sinker. I was sunk. So I kind of moved from there onward.
How was it received there? You were buying in, but I mean that philosophically buying in. How was it received when you started telling other people about the things you were discovering?
Yeah, it was a bit, on some sense, some people were extremely embraced the concept and realized that the amount of step change. So we had at the same time kind of the ability to captivate everybody's attention, and then also scare the living crap out of them as well. So working in a big four audit firm that's based on security and concepts that could turn over the apple cart in global financial services were probably not, right up on the top of the list. So I think we probably made, we then kind of pushed as hard as we could inside the walls of a big four. We were the first big four to accept Bitcoin. We put a Bitcoin ATM in the lobby. We gave everybody Copay wallets. So 140,000 employees around the world had crypto wallets at the time. Bitcoin was something like $400. And we had a couple of people make their partner case, like watching over our fingers and being sort of the compliance control. So that was exciting.
Man, that's a big deal, actually. I didn't realize that. How did you come then to go from that, so still being within the big four, to kind of branching out and going outside of those walls?
Yeah, well, kind of quickly became clear that if I wanted to realize my ambitions in doing something real with blockchain, I would have to, I couldn't do it within the confines of an audit firm, certainly not a big four audit firm. There would be always just too much. We would always be lagging behind. And so I got the opportunity to co-found Swisscom blockchain with Swisscom, which is a national telco provider in Switzerland and infrastructure provider to about half of the Swiss banking market. And which was amazing because all of a sudden we had infrastructure. We were sitting on the side of an infrastructure provider, offering them the ability to add cryptocurrencies to their portfolio of assets that they manage for their customers. So we were setting up HSM modules, with Raft protocols for those banks and integrating that into things like Avaloq and private banking software. So on the infrastructure side, again, kind of pushing towards early adoption before the 29 ICO boom and everything. It was a super exciting place to be.
Yeah, man. And so from that point to now, how have you been building or navigating or even thinking about, let's say, just blockchain more generally?
Yeah. Well, it's gone through quite a lot of evolution, right? So, the cycle of bull to bear to bull again, it kind of leaves its mark on everything. I've seen great projects fume out during bear cycles, leaving innovation on the side of the street, semi-finished builds and great developers kind of searching for a home. And I've seen, the hype of pure fluff, being chilled to death and getting everybody's attention and taking it away from the serious projects. So I think that where my focus is kind of continue to be to continue to stay on the infrastructure project. Or on the infrastructure side of things. It's difficult maybe always to identify exactly which theme or which what the flavor of the day is. But when you're providing infrastructure that makes all the projects work better, then you're kind of selling shovels during the gold rush. It doesn't matter which individual prospector goes out and finds something. In this case, as long as you're selling the shovels, you're happy that all the prospectors are buying from you. So that's kind of where where my focus is stayed, and also how I think we can get into the mass adoption plays, right? Like we're talking about the next sort of 10 million people that are starting to use blockchain based technologies on a daily basis.
Yeah, well, I mean, let's dive in there a little bit more then. What is it that you are building or that you're working on at the moment? How would you explain Synternet? So maybe how would you explain to somebody inside Web3, and then how would you explain it to somebody who has perhaps little understanding of Web3? You're at a family dinner or something like this, and someone says, "Oh, what are you working on these days?" How would you explain it to each of those?
Yeah. Okay. So let's start with the hardcore degen explanation, right? So we are a trustless, interoperable data layer one, that offers trustless, low latency data direct to your application. So for some people that will be like, wow, that's interesting. Other people will be like, well, what are you talking about? So for other people, that may not be so deep. You have to imagine it like this, particular, blockchains try to run as lean as possible. And you don't need to capture everything on a blockchain. In fact, you try to capture as little as possible to keep that immutable record going as smoothly as possible and as fast as possible. And so there's a whole bunch of in the way that, there's a whole bunch of things that are kind of data that you don't necessarily need to store on the blockchain. Like, what is the month of June? Because the blockchain can figure out what the month of June is after the effect. And by saying, okay, June goes from this block height to this block height, and that's where the month sort of stops and ends. So what you quickly kind of realize is that blockchains are just a bunch of streaming messages that are turned immutable. And as soon as you want to kind of interpret those messages and do anything with them, then you need to be on top of the data. And that's what we do. We provide that data in ultra low latency, trustlessly, anywhere in the world, for just about any chain, with ultra low latency.
Can you tell me, why does on-chain data availability matter? What's the you made some differentiation between things that matter on-chain, and things that matter or don't really matter on-chain. Talk to me about the on-chain data availability. Why does that matter? Why is that important? How are you in Synternet thinking about that?
Yeah, well, so I mean, off-chain facts are interesting. It just doesn't have to be our focus, right? So a lot of off-chain facts happen every day. Is it raining in Spain? Is there a hailstorm in Spain? That's great. You could bring that stuff onto chain, and then smart contracts could work with it. But that's not what we're focusing on. Why on-chain data matters is because there's a lot of stuff that happens in like when you go decentrally that are entirely based on smart contract logic, and the smart contract simple as possible in order to keep it secure and safe. So if a smart contract says, okay, if A, do B, then the circumstances around A also need to be, manifest themselves in the same way. They need to be trustless, immutable, and decentralized, right? Otherwise, somebody can just whisper A to the blockchain and B happens automatically, but you've lost that aspect of trustlessness. So in our case, when we talk about on-chain data, we talk about the things that are manifesting, in the current block and in the next block and the pending block for all different kinds of chains. And those things are immutable. And so when we talk about prices between certain cryptocurrency pairs, what is the last trade gone at? What is the pending trade? What is the sentiment coming up in the mempool for the next set of trades? These things are extremely important for people who are, using more and more decentralized architecture to trade, like Uniswap and SushiSwap and DYDX and others. So in the trading space, 100%, there's a lot of need for real-time data. What we're also discovering is that in other spaces, like real-world assets, understanding the state of certain things is also extremely important, and not always captured in the real-world asset chains themselves. So, for example, if you're doing a ride share where you're tokenizing, the use of a Tesla, then the blockchain might take care of all the accounting for you, but it might not tell, sort of the rest of the net that the Tesla is done with its ride and available for the next ride, and it's free. So broadcasting these states and broadcasting the states of the assets are extremely interesting and have the potential to actually redefine supply chain. So if you imagine a supply chain that is, previous kind of way of thinking about it would be, I'm going to take a string of pearls, and that represents different stops, from the factory to the warehouse to the port, to the shipping container to the end customer, and I'm going to string these pearls together. Then that's kind of the previous view on supply chain. And when you imagine a supply chain the way that people are looking at it now in the RWA space, then you imagine that all these assets are talking to each other all the time. Like they're constantly broadcasting their state. Hi, I'm a pallet. I've got 10 tons of used fruit bunch sitting here, and I want to be picked up. Anybody who can pick me up and bring me to there, we'll get this reward. And as soon as you start broadcasting the states of these different things, then you realize that there's a completely different supply chain, which really opens up and frees the ability to interact with those supply chains and adds a whole bunch of security. And I think that kind of revolution is still yet to come, as extremely exciting.
Oh yeah. So in terms of like that exact example there, what are you building at Synternet? Are you building just the infrastructure that's maybe a composable layer that people can come in and build that supply chain on top of the infrastructure that you're building? Or are you building the rails for that kind of supply chain, broadcasting? What does that look like? Is this something that is it a build it and they will come situation? Is it a let me show you how it's going to work and then we can explore other possibilities? Or how's that working? Or how are you thinking about that at the moment?
Yeah, so we're very strong believers that we're not always going to be the most clever people at any particular group of people, right? So we have and so we're creating an environment where people could build, and we're kind of like the big data guys, right? So we'll come in with the big data pipes, and we'll be like, here's the fastest trustless data that we can get you, and we can get it anywhere in the world for like 20 milliseconds delayed from when it was created. And here are a bunch of tools, like we have 40 different SDKs that are riding on the back of this that allow you to build with that, put it into Rust, put it into Golang, put it into whatever you need it to be in order to use that data as effectively as possible. And, guess what? We've done it in such a way that anybody who's built anything on Synternet before, you can actually pick that build up and build on top of it. So if Bob comes in and codes some libraries and it turns out to be really useful, and then Alice walks in a week later and says, hey, you know what? I can create a neat little circuit breaker that'll warn the world if Terra Luna is happening again. Then both Bob and Alice will be rewarded if Alice manages to kind of sell that onward. And this concept of data royalties, so that the entire building chain is incentivized at anyone's success at getting the product out there. It does two things. It lets you kind of innovate on the back of other innovations, which significantly accelerates the amount of work you do, or the amount of work you have to do to get a product out the door. And it creates this kind of place where everybody's incentivized to bring volume into the platform. Alice isn't kind of, Bob's not mad at Alice because she's making 10 times more money with her amendment to his hard work. Bob's super happy because, he built something that Alice is using, getting paid handsomely for it, but some of those data royalties come back to him. And that's a unique concept in things. It's extremely in line with the way that we see Web3 as a creator's economy. And it really kind of increases the drive in our space and how to use our platform.
Yeah, man, that's actually really awesome. So I come up with something that's really great, but maybe basic. Someone else comes along and builds on top of that, or multiple people come along and build on top of that, and maybe even other people on top of that, or utilize that initial simple thing that was built, and yet the royalties trickling back, even if a subsequent build gets millions of users versus only a couple for, again, the simple thing that I build. What you're saying is that there's still a reward for builders, so long as what they've built is getting used in some kind of capacity. Is that what you're saying?
Absolutely. And because it's a reputation-based marketplace, you can still say, okay, well, look, here's something put out by Peak in the RWA space. Peak is the main data publisher. And then we've got another project that's building, that's using Peak as a blockchain. It's also involved in the end output. And you can see if you're happy with the reputation of the people that have influenced the data and the outcome as far as you see it. And if you're happy with the price. So it really does open up. And then the usage is, okay, I want to only use 5 minutes of that, or I want to use 24 hours of that, or I want to use a month's worth of data, or a month's worth of an output. You have that kind of supreme flexibility in there as well.
That's amazing. You've mentioned a couple of times now about the speed. And so I want to delve into that a little bit as well to find out how are you making that happen? How do you, especially when it comes to DeFi, but in many, some things don't, doesn't really matter if you have the speed to know millisecond by millisecond whether or not that pallet still has apples on it. But you definitely want to know if somebody's going to be front running your trade, or if there's an arbitrage opportunity that exists now but it might not exist in 10 seconds time or something like that. How are you dealing with that speed factor that you've mentioned a couple of times now?
Yeah, I mean, so I think fundamentally, we believe that relying on a centralized entity to save the blockchain data and then make it available to you is fundamentally flawed. And for a long time, nobody noticed because it didn't matter, right? Bitcoin chugging along at 10-minute block intervals. Even with Ethereum, significantly faster, it just still didn't really matter, right? Because speed of trading wasn't quite the nifty thing about blockchain. It was this fact that you didn't need a middleman, right? It's the sort of decentralization of everything. Now we have chains that are moving at incredible speeds, like Solana and others, and doing massive amounts of transactions. And all of a sudden, and they're trading the same assets as these slower chains. So all of a sudden, this kind of speed does matter. And speed also matters if you're doing simple things like I'm trying to fill a stadium. You wouldn't be able to fill a stadium with, a smart contract based tool, because you wouldn't get the people in time, right? Because the contract finality of is this a real ticket, and does we have it, and is it been used now, is just too slow for you to fill the stadium, in a reasonable amount of time. And so as you kind of realize that real world events do require kind of an immediacy, you kind of get to the second level, right? That let's stop thinking of blockchains as the entire world lives in the Ethereum ecosystem, and I'm either Ethereum or not Ethereum. Let's think of blockchain as Ethereum does some nifty stuff. but so does Solana, and so does Bitcoin, and so does Tone, and so does Base, and so does Cosmos. And maybe I'm using Cosmos for one set of things, and I'm using Bitcoin for another set of things, and I'm using Ethereum for a third set of things. Wouldn't the better way to be thinking about these different chains is that they're like horses for courses, and based on what you need to do in blockchain, you could build modules to do them in the most appropriate environment. And that you can interact with these things as you choose to, in a way that is, cross-chain and automated. And so once you start seeing the blockchain tapestry of what's out there, you're saying like, well, the innovation space and the actual chain is probably, coming to like diminishing returns. Whereas being able to weave applications that actually use multiple chains consistently and continuously with automated asset transfers between them, now that's starting to become interesting. How do you get to that level where you can actually settle trades between chains? Well, it first starts with a lot of data, and then it starts with having these sort of specific modules that execute into the different chains and get you contract finality. And so that's really where we're headed. We've got a scheme that we call our atomic clock, basically, but it allows you to get contract finality and settlement, regardless of the speed of the underlying chain, and almost instantly across chain. And that's really exciting for us.
Yeah, right. That's again, I keep having the question of the how because the different kind of different block sizes and speeds and TPS, and if you're looking ahead a couple of blocks in mempool and those kinds of things, you're looking at all of those data points across multiple networks and layers, and it's the speed component that I'm most interested about, because in DeFi in particular, or in trading perhaps, especially kind of the high-speed trading can make or break an opportunity, or like in my case, for example, back in the day when I was running an algo bot, and one day the algo bot started slowing down, although my servers were right next door to the exchange servers, cost a lot of money because of certain delays. And so that's with one point of failure, but now we're talking about across chains, across geographies, across even different programming languages and whatnot, and you're bringing all of those things together. That's the short of it.
Well, so let me jump into the how a bit. So we have 17 patents that the company's earned on making the internet a faster place. So that's kind of the basis, and the way that Synternet has done that is effectively map out all of the core connections of the internet and trace them back and monitor them consistently for their latency. And what the result is mind-boggling, right? You have some nodes that run at 300 milliseconds delay, and other nodes that are something like 10 to 15. And it's constantly changing depending on packet routing that happens in the background all the time. So on the back of this structure, we've then used a real-time instant messaging protocol from a bank or from banking, and we've modified that heavily in order to extract the node data as quickly as possible, and also to cache those bits of data in a decentralized format around the globe that allows us to create this lossless environment, right? Because dropped messages are a thing, and we do need to be able to kind of persist a lossless environment. And so we've been building that since 2018. The 17, I know a lot of data protocols are saying we're the fastest, but we've got 17 patents to prove it. When we were working for one of our customers, a company called Onchain, you might know them as Ladbrokes in the UK. They're one of the largest online betting sources. And Like we saved them 36 years of broadcast time during one World Cup. Right. Wow. So the technology really works, and that's the basis on top of which we're building. And that's our advantage right now. I think ultra low latency, direct to app in a trustless fashion, that's going to be the future of data delivery. So in any way, we expect that others will catch up and others will start copying what we're doing. And that's fine. The way that we're staying ahead of that is also, data alone is like drinking from the fire hose. So what we are working on now is, when does data get interesting is, well, once you are able to sort of identify the important aspects of the data, and once you're able to sort of interpret those important aspects to give you signals on how to behave, then the data becomes much more interesting, right? And so being able to do data interpretation on the fly, being able to do computation of data without affecting the latency, that's where we're heading next. So by the time the others will have caught up with our speed, we'll be in a different space.
Yeah, man, that sounds amazing. But how is AI impacting or changing the way that you're thinking about these things, or like the rise in AI maybe over the last 18 months in particular, although obviously people have been building for decades. Is that providing more of a moat for what you're doing, or is that helping other people to potentially catch up?
It's kind of how you do things nowadays, right? It's very difficult to imagine that you could be doing anything without AI, given the speed of what we do. A friend of mine at Cambridge, he basically refers to all of AI as recommendation engines, right? They're recommendation engines to recommend something to do. That's a nice, simple way of looking at it, right? ChatGPT recommends how the words fall into a sentence in order to explain something that humans can understand. Dating apps recommend, or TikTok recommends something based on what your previous history is and what you might want to be looking at next. And in a way, like most of what we would be looking at would be recommendations to do a trade, to not do a trade, to exit a position, to enter a position, or where there might be opportunity because, moving assets cross-chain. So then it's the question of like, well, what's my window of time to act? And if you look at the speed at which most of the chains are acting, are kind of, setting prices and changing, you realize that your window to act is relatively small and getting smaller. And therefore the speed comes up. And there's no way that a human could be sitting there looking at 53 different chains data in raw, unedited format and identify the trends and patterns necessary to make recommendations to trade or not to trade. But AI can, and machine learning can, and it does. And that's where we use it. That's where we see it. Those are some of the tools that developers have to build on top of Synternet, is that we are ready for, we're sort of made for AI. We have standard interfaces into Tableau and other AI tools, which allow you to just kind of see those patterns faster than humans could, and also recognize and interpret them. In what we're building next, we feel AI is going to create an even better landscape for everybody. In that, let's imagine there's two types of agents. Right now, agents are coming up. One agent is kind of like, go find me a pair of shoes, and it comes back with like the sneakers that you're looking for, and it gives you 20 examples. And if you're good at this kind of stuff, you might even have managing agents who then have their own agents, and you have 100 different bots looking for you to find your sneakers, and the manager picks the top 10 and gives you a recommendation. That's wonderful, but it's all just a toy. It's a fancy Google search until you connect a wallet, and then it gets serious. As soon as you connect the ability to execute an economic transaction, then your agent just turned from a toy into a tool. And that's what we're working on. We're working now on autonomous economic agents that use AI functionality to do pattern recognition, and then being able to automate the movement of assets cross-chain, on their own accord, and according to their own wallet, and that you trust enough to connect to a wallet to execute for you. And that's kind of, then we're talking about a whole interesting, sort of next level game.
Yeah. Well, yeah, I'm just even racking my brain to think about the different kinds of, vectors of I don't know, maybe even risk or opportunity that there are with those kinds of, opportunities, with those kinds of agents that can make purchases. There's a, you've mentioned a few times now, the trustlessness of what you're building. But when you give somebody kind of the keys to your wallet, not even proverbial keys to your wallet, like the literal keys to your wallet, then there actually is some trust there. So you need to understand that, the code that's driving it and what's using it, either can't be taken advantage of, or there's some, risk mitigation in there. What are some other kinds of arenas or verticals or, ecosystems that might be interested in this kind of thing? We talk about, DeFi or purchasing, retail, that kind of stuff. What else? What other kinds of people could be?
Yeah, I mean, certainly from a trading perspective, things just got very, very interesting. I think, but also, what we're seeing now is that, we have, I would say, let's imagine we have 1 million builders, that are building on blockchain, and they've been around since Vitalik started Ethereum way back when. And let's imagine we have like 1 million builders who are going to be becoming part of this ecosystem in the next run. Now, the 1 million builders, that have kind of walked the evolution of blockchain, they're already, their way they think is already shaded. And in an economy and in an industry sector that moves, let's say, 6 or 7 times faster than anything I've ever experienced, that few years of building, has already tainted these builders in that they can almost not see the way that the future builders are looking at the space. Sure. And that's really what for us is interesting, right? Because we see that future builders, when they look at this tapestry of blockchains and they look at the different apps, they're seeing a tapestry where they interact with everything. They're not like kind of coming from one church and one religion or one cult. And they see, really kind of more like a feast of samples where they can kind of work with a whole bunch of different technologies. And then on top of that, we see the evolution. Like we start seeing wallets that are almost like DeFi hubs, with multi-party computational key unlocks that are as safe almost as, hardware wallets, but that have your entire trading portfolio able to be stored in this DeFi hub, and that can act for you on multiple chains. And we're watching those kind of developments with extreme excitement, knowing that, the first thing that, a development like that needs, your wallet one-stop shop for any chain, anytime, and ultra secure, is going to be really kind of truth and data. And that's what we come in, we do truth and data good. We do it very fast, and we do it, trustlessly. So when we see developments where we see, again, sort of the next 1 million people connecting, that's when we get exciting.
So you say you have 1 million users who each have 30 agents all operating. And then because they are having success, another 10 million users come on with another, 100 million agents, autonomous agents making economic decisions and those kinds of things. How does this, as this scales, does that become slower and more cumbersome, or as this scales, does the data become better and more efficient?
We have an inverse relationship between scale and cost, as well as between which is the exact opposite of a company that's indexing and saving the data. The more you index and save data and make it available, the more server farm equipment that you need to make available, the more sort of bandwidth you need to open up for your RPCs, and so forth. So Whereas we, from going from one user, let's imagine you have a base cost of $500 a month, to go to 500 users, you could either reduce the cost to $1 a user, or increase your margin by 500%. And that it's not exactly that scale, but it's close. And what effectively happens is that developers who develop on Synternet, using our data, they have a fixed cost base, and they have an almost upward unlimited scale to get their applications to global Web3 users almost instantly. So things can go viral very fast, right? So you could imagine that if Bob is really paying $500 a month, and that's to get his data and to do his computes, and he sells that to 100,000 Telegram users who subscribe to it on a monthly basis, then he's making $100,000 a month with his fixed cost rate. And the way that we've built the layer one blockchain around that is that all of the security, all of the speed, just scales alongside with that, right? So he pays more brokers for that, he pays more validators for that, but ultimately that doesn't reflect in his costs, because that comes out of the scaled growth that he experiences on the consumption side.
Yeah, right. Gotcha. So one of the things that I've been wondering is, what makes this right for now? Obviously, this is something that needs to happen. Okay, so philosophically and just materially, this is going to benefit people and users and the world, if we can be kind of grandiose in that sense. This is the kind of thing that people were trying to do 2017, 18 in terms of interoperability and whatnot. And as you mentioned at the start, things have come and failed. And why is the time right now, basically? Do we need more computing power, and that's why we can do it now? Do we need the advent of AI, and that's why we can do it now? Do we just need the unique combination of your team to come about? Is that why now? What do you think? Well, now's the time. So
I'm glad we got you to the point where you see that this is an exercise for the greater good. So that's always the good foundation.
Yeah, man. We need great use cases of blockchain technology. Meme coins, great, lots of fun, and NFTs, awesome. That's great, but I think once we actually have legitimate use cases where the offering is significantly better than what people can do in Web 2 or centralized, ecosystems, I think that's where we'll actually see blockchain and Web 3 really start to come into its own. And so that's why I'm excited about what you're building. But again, I want to know why now is so good.
Yeah, well, I mean, and it's a great question, because I could wind the clock back to when Bitcoin was $500 and I was running around the hallways of Ernst & Young trying to get everybody to take a look. Being early feels just like being wrong in many ways when you're dealing with technology on the vanguard, right? So you might be right, but if it happens 5 years later, you're just not going to make it there. I think that from our perspective, again, we're selling the shovels in the gold rush. And it doesn't matter which of the prospectors goes out and finds gold in their allotment, with our shovels, as long as we keep making the better shovel. And that's really what our focus is. We've got, I say it often and I repeat it often, but we've got the best team in data in Web3. I'm 100% convinced in that. We have had the same engineering team since the company was founded. We haven't lost a single engineer. Which is through bear and bull, through ups and downs, through tokens prices, doing all kinds of funny things. And that's an attestment to, again, where are these people, what our team is really focused on. And that is to, and the other thing is that we know that whatever is coming, whatever is going to happen, data is going to be an integral part of it. Being able to understand that data with machine learning and AI algorithms is going to be an integral part of that. and being able to do so use case based in a modular ways is also going to be an integral part of that. So in a way, we're hedging our bets exactly. Which seems like kind of ultra conservative. Is like we're kind of turning ourselves resilient to any bear market, resilient to any kind of ebbs and flows of meme coins popping off or not. We're banking on some of the core fundamental principles of IT in general, that it's data driven, and trying to build the best builders environment that we can with those building blocks. And I think with that, we're not leaning out the window too much. And at the same time, we have some extremely talented people that are able also to, like Jonas, our CTO, really also kind of to mark a path that doesn't make it seem like we're ultra conservative, but also gets us in the right conversation with the right chains and the right projects. That we have some really lighthouse ships like Peak and Injective and others building on top of us.
Yeah. So like I asked you about how were you received when you were talking about Bitcoin, in the halls of Ernst & Young. How are you finding the reception to the kind of the centrality of data that you're talking about here, to what you're building with Synternet, to all of those different kinds of applications and verticals that can be built upon, the tools and the picks and shovels that you're building? How are you finding that being received?
Yeah, I mean, it's a completely back in the time when I was at Ernst & Young, crypto was so new. Most people never heard of it. Bitcoin prices on $400. Like most people had no Scooby what it was. And in the meantime, for whatever reason, everybody knows about it now. So first of all, it's, and they might have different views on it, right? But it's not going away. That's kind of clear. It's going to persist out there, and it's, either you love it or it's annoying. But that kind of general background information of around what it is, how it works, how it does, it saves us a huge amount of understanding. And also, our tool is kind of complex, right? We are we're there for the builders that are trying to make applications that you'll be using, and you might not even know there's a blockchain behind it, and you might not, and you shouldn't care. And that's the type of applications that we see coming out next, and that the sort of next million builders are building on are things that just work in a way that you could never have imagined possible. And in the background, you have decentralized accounting, and you have kind of transactional speed and proof of attendance and all these kind of together. And it creates a super cool app that's being used in the next World Cup or the next Formula One races. And you just don't notice that it's blockchain, and you don't care that it's crypto, and it has nothing to do with Bitcoin in your mind as a user. But it is. And so when we talk, and so when we work on those, we are going into we've started a global city by country drive where we're working in 14 different countries and 20 different cities all around the world, where there's a strong concentration of blockchain developers working with the universities in those countries. So like Vietnam, Philippines, Indonesia, Thailand, South Korea, Tokyo, and through that, we're really kind of, we're making it so easy to use our data for the next million builders, and we're making it so painful to move away from us that, people will wonder, was there anything else before Synternet?
Yeah, man. Do you think that with the rise of just more, with the rise of, I guess, the regulatory environments around the world being more accepting of cryptocurrencies or blockchain technology, or even, with central bank digital coins and currencies coming out, do you think this will actually, I'm just trying to think about how do those million users not know that they're using blockchain? Especially when it comes to, they're connected to a wallet. Is that a wallet that they've all bought Bitcoin? And so it's Bitcoin that has become so prolific that everybody's using it, or is it the central bank coins that, rise to prominence. And so people are just used to transacting electronically all the time. Like in my country, some banks have stopped having ATMs and stopped using cash altogether because so few of their customers use any kind of cash. Everybody's using digital currency in some form. How do you see that aspect of the ecosystem you're building actually materially coming about with those first million builders, for example?
Yeah, so let's separate for a minute the cryptocurrency as it equates to liquid cash or even store value like a gold investment, right? So once you remove it from that, then it's much easier to see that potentially an app could be supporting your behavior to do things like Sweatcoin. Let's take Sweatcoin for example, right? So the more steps you do, the more you sweat. You start getting sports equipment offered to you because you've passed a certain threshold, right? That's cool. 60 million users, right? Wow. Okay. Probably the predominant application usage on Nearchain or on the Near protocol. Nobody's sitting there thinking, and I don't think any regulator is sitting there saying like, God, we got to clamp down on this sweat coin. It's just going, it's just going to ruin the banking system. No, it's like, it's fine. So now we saw how quickly, all of these fashion companies and sneaker companies jumped into NFT world, and how NFT supporting an NFT. There's some studies being done that if you buy some sort of wearable in the digital world, you're like 85% likely to buy it in the real world as well. And having this kind of symmetry between your digital assets, your digital persona, and what you were in real life is a real thing. And so now NFTs can be a whole bunch of different things, right? Access to Formula One VIP section where you just show your NFT to get in. It's gated communities with specific memberships and access, and being part of a club that other people don't have access to. So again, that's not in the regulators haven't even kind of fathomed. That's not part of the travel rule or any of the other stuff that you have. So this kind of gated community NFT subscription model to rights and privileges based on things, that's probably where it's heading. And then sure, some of that translates into direct material content, which the regulators are maybe concerned with. But I think that the regulators are trying to kind of cut the cap off of the frothy wave, and they're not really paying attention to the ocean underneath. And trying to hold that back is like trying to hold back the seas. So
sure,
we'll always for EY, but first you have the companies that are trying to do innovative things, and then you say, oh, we better regulate that, and then you have companies that come along and audit them so that that it's safer, right? And so we'll always have innovation kind of leading the regulation by quite a few steps.
All right. Then we have a lot of CEOs and founders who watch the show. You've recently completed a funding round. Do you have any kind of advice to founders or CEOs who are just about to go through that process of asking people for money or putting themselves out there? Any advice or key learnings from the most recent couple of months for you guys?
Yeah, I mean, I think as a CEO or co-founder, you're always looking for sponsors and sponsorships. It's how you get along. It's how you move forward. Nothing is one man, one island. And selecting, so one, do your research, right? Know who you want to get into bed with, especially during a bull cycle. We get offers for investors all the time we just realize it's a relatively, they have no interest in what we're doing. They have a strong belief that our token is going to be bullish. They have a strong release that there's minimum 5x, probably a 20x in there somewhere. And they want to get in as quickly as possible. But they're there to turn it around. And that's relatively toxic. Like we've got, 36 engineers that have been working on what we're working on for years. That we've accumulated patents. We've gone through the tough times, the hard times, and those kind of investors, they're in it. They're extremely self-servient, and they're not looking to leave anything behind for anybody else. And so like it immediately kind of creates a watershed. Then you have other investors that, and we've got some amazing ones. In this last round, we've got CMCC, Polygon Ventures, Faculty Capital, Moonrock Capital, just to name a few. And those kind of investors, when they come in, they look at everything. And it feels like a confessional, and you really have to show like everything, even like why you got that D- in physics in high school, but at the same time, like welcome that attention. Like who else, like people who don't care, they're not going to dive in and they don't want to answer. And even if that investor then walks away and decides not to invest in you, then probably you'll realize what he was looking at or what she was looking at the time that she tipped the tide against you. And then you can see like, maybe we do have maybe there's some things that we can shore that part of our offering up. Maybe our go-to-market is flawed. Maybe our product's not useful enough. Maybe it's not ergonomic enough. Maybe don't have the right partnerships yet. So I welcome focusing on high-quality investors, identifying the type of investor that you want, using sources like Crunchbase to identify them, make a short list, and then using whatever means necessary to get your story in front of them, and then just listening intently to what they have to say. And if you do that consistently and you focus on long-term benefits, it doesn't matter if it's a bull cycle or a bear cycle, you'll get people that are interested in investing.
Yeah, that's good advice. So go for smart or good money, not just any money. Hustle, like do the work, but treat it as a coaching almost, a coaching kind of process as well, where you get feedback from the smart money. I'll give you feedback that will be really helpful for you building up whether or not that money comes or not. That's really great advice. I
think that's, that it sounds easy. Only take smart money, right? And you're sitting there as a founder, and you're saying like, well, I just need money right now. It doesn't have to be that smart, but to be honest, if there's somebody who's ready to throw, sort of unaligned money at you, there's probably at least 5 out there that would not only give you the same funds, but also actually really have a vested interest in seeing you succeed. So it's probably, if you have, let's say, dumb money, then just double down a bit and find the smart money that's a little bit digging a little bit deeper.
Yeah, that's super helpful. I have one question that I'd like to ask all of the guests before we wrap up, and that is, do you have any particularly contrarian views, like things that most of the people think one way, but you don't think that same way? Or it doesn't have to be controversial necessarily, but just in which ways or in what way are you swimming against the tide?
Yeah, that's so I've also always had this this extreme fascination with newish technology, right? So that started working with in-memory databases before they kind of came about to be a thing, started working with cryptocurrencies before anybody knew what it was. I think, and so kind of always like seeing what's around the next bend is like, it's not controversial. But I think that's probably where I see it. I also kind of, and this isn't, this might say, kind of a fallout kind of related, like doomsday sayer. I do see that there's limitations on the current financial systems. And I think those limitations, the regulators that are putting protectionary measures into place to protect sort of, the fiat currency holders in their domestic bliss, they're actually doing a massive disservice to those exact people that they're trying to protect, because what they're doing is they're giving an excuse not to innovate to financial systems that sorely need to be reevaluated. And I say that, being a Swiss national in Switzerland, where, financial services make up a significant portion of our GDP, having worked for Swisscom, which runs half of the banks in the country. I've seen the insides, I've seen the boardrooms, I've spoken with the decision makers. The lack of awareness of the cliff that they're about to go over is frightening.
Do you think, is that a factor of just no longer do the big eat the small, but the fast eat the slow? Or is that just a factor of they're not keeping up with technology? Or is it a factor of they're just so inefficient and terrible that they have their heads in the sand and don't actually see what's, the building crumbling around them, or something else? Is there anything or something else?
It's probably at least a few of those factors in there. I think it's also they're being allowed to not care, right? And the whole thing is presiding. I mean, look at the amount of US dollars printed during COVID, right? Look at the US debt spending. It's like makes The Economist almost every week. It's surprising it's not on the cover. But it's almost always a leading article, is that this system is untenable, right? You cannot continue to do this. And everybody's just sitting there, drinking their coffee and thinking, sipping their tea and thinking, it's fine. There's nothing wrong here, right? But it's not fine. And it'll take some, like every time there's a bear run, like it'll be triggered by, some idiot that does something horrible, right? Like FTX was the last one. There'll be another FTX. It'll be 10x of what, the scam and the shock and the disappointment. It'll trigger our next bear market. Fine, fair enough. But that effect will happen in the bricks and mortar banks that we see all around the world and that we resolve, and it's because, I know what they look like from the inside. I know how many of our global banks are using Microsoft Excel as a core system platform, and it's shocking. And that, in addition to, being propped up by the governments that kind of, want to protect their own banks in that global market, that combination is setting, global financial services up for, a kind of end of world or end of days scenario. And that might not be contrary to most crypto degens, right? I think it's probably what all of them think, right? But I'm relatively convinced that that's a fact, right? So,
can you put your prophet hat on and tell us the timeline?
Not in my lifetime, maybe, but definitely in my kids.
Wow. Okay. So that seems like a long time from my perspective.
Yeah, it depends. I have some very unhealthy habits, right? No, I mean, I don't know how long I'll be around. No, for that, just kidding. I mean, so for real, I think that, it won't come in one blow. It'll come in sort of it probably will come, in the form of the Western standards don't quite meet the Eastern standards, and these systems stop talking to each other, and then that'll be the first part, right? So the global payment settlement network will suddenly no longer be US based. The currency as a reserve will no longer be US based. And then that kind of opens up, the whole system for a bunch of attacks. And then all of a sudden, the platforms aren't talking to each other. It just kind of ripens the risk of the entire ecosystem. And then you'll have sort of like, some people kind of depegging and exiting that entire system by accident almost, right? And so it'll first crumble, and you'll be able to see the cracks before it then falls completely apart. And a new world order is established. If that's cryptocurrency or not, it's almost irrelevant, because the cryptocurrency will be happily chugging along in the background, and it'll be store value, just like, the gold that you got buried in the backyard or whatnot.
So is it almost a race then to see if we can't build something better that can proliferate before the existing system comes tumbling down? Or are you saying they'll just have to operate in parallel until the other one comes inevitably crashing down, and then everyone will just have to move over? Or
I mean, look, being in a race to save it would almost like imply that you're trying to save this economy. I don't think, first of all, we're not a philanthropy, right? We're a profit-oriented enterprise. But also, some of those are the main catalysts of all of the evils that we have in the world. War funding, climate change is because of the investments in carbon, and that's happening with our pension funds based on those old financial systems. Maybe they're not worth saving. Maybe the race is not to save them, but to sort of move them into retirement earlier, which would be a tremendous advantage to the world, I think.
Yeah. Daniel, thank you so much for joining us today. Really pumped about what you're building. If people want to hear more from you personally or find out more about Synternet, where can they do that online?
Yeah, thank you very much for having me. It's been an awesome conversation. I really loved exchanging ideas with you. So I'm easy to find. I'm on LinkedIn. I do monitor and respond. I won't buy any of your services if you contact me on LinkedIn, but I'm easy to find. And if you have a real connection, then you can get me there. I'm also easy to find on Telegram and through our social media channels.
Good on, Daniel. Thanks again.
Perfect. Thank you.
Thanks for joining us today. Hope you enjoyed this episode of the Off-Chain podcast. We love bringing you great guests like Daniel, and hope we've inspired you to think about the future, about Web3, about technology, and about how you might be a part of making it. As always, like, subscribe, or better yet, share this episode with a friend. Help us spread the word, and join us again next week for another exciting episode of the Off-Chain podcast. Till then, take care.